The jump in gold prices have given miners a good problem. What do you do with all that cash? I'm with Randy Smallwood. He is CEO of Wheaton Precious Metals. Randy, welcome back to Kitco.
Always a pleasure, Michael. Thank you.
You had a jump in revenues in the quarter.
Yeah, no, we had a jump in production, which ultimately, of course, feeds through revenues, yes. And really what it comes down to is strength at Salobo and Constancia. Hudbay, Constancia is doing a great job. We had really good production for the entire year, really good production out of the Constancia operation. But Salobo is our flagship, and the phase 3 expansion is now ramping up, and so we were blessed with Vale satisfying the first stage of that expansion. I think they finished it off in November, so that was running at 32 million tons per annum. So ramping up, the mine originally was only 24 million tons per annum. It's ultimately wrapping up to 36 million tons per annum, and we're expecting that by the end of this year. So no doubt, Salobo outperformance at Salobo was the best quarter that they'd had since way back in 2019, pre-COVID, and much higher grades. And so we do expect continued strength at Salobo, and it was really the key to one of our successes in the fourth quarter.
Help me out that again, clarify that for me. So it was really a production story that happened this year that you're looking at rather than what was happening with the metal prices?
It was both.
Oh, it's both.
Of course, we got the benefit of both. Exactly, right?
Yeah.
Rising production along with higher metal prices, definitely both of them are contributors to good, strong revenues.
Salobo was, I believe you made 300 million plus payment into that for their production help. And then also, I think you made about 400 million into Platreef, correct?
Yeah, the Platreef deal didn't get closed. Well, the overall deal, it was Platreef and a few other deals that we acquired off of Orion. That didn't get closed until this year. So it was closed in late February. So the only payment, the large payment that we made, of course, was the expansion payment, the $360 million, the first phase of that expansion payment to Vale for that Salobo phase 1. This year, assuming that they satisfy the 35 million ton per annum throughput rate, which they're scheduling for the 3rd/4th quarter of this year, we'll be making them another, I think it's about $160 million payment. And then after that, what we've got is a series of high grade incentives that help motivate them to push some low grade aside and run the operation with not only the expanded capacity, but higher grades. And so we think Salobo is just going to get better and better every year.
You announced a dividend.
Yes. It's a bit of a change. In the past, our past policy had our dividend tied directly to our cash flows. And there's no doubt we've got growth coming here right now, but what we've always had with our past dividend was sort of a climbing basement, i.e., once it went up, we wouldn't let it go down. And so, to be honest, we were paying currently somewhere around 37% of cash flows, and so our policy was at 30%. And I realized that even with the growth we see over a couple of years, it'd be a couple of years before we'd actually see our dividend bump, and we've already been flat for about a year and a half. We've had great growth over the last 4 or 5 years in the dividend, but the last year and a half was flat, and we weren't prepared to let it stay flat for another couple of years. And so we're bringing some of that growth forward for our shareholders in terms of bumping up the dividend a bit. It's went from 15 cents a share to 15.5 per quarter, so it'll be 62 cents a year for assuming we don't increase it again over the course of this year. But what there is a commitment that every year there will be some growth to that. Hence the phrase progressive dividend policy. We'll be able to add to that based on how we're doing. And, with our growth profile, I'm trying to understand why it's not going to grow even more than that. But, fingers crossed. Hopefully we find lots of good opportunities to continue growing the company too.
Sticking with Wheaton, what are going to be some of the milestones? What are going to be some of the production highlights you're looking for into 2024?
Well, clearly Salobo being our flagship asset, having that third phase up and running, getting that mine running consistently at 36 million tons per annum, pretty exciting. They're just moving into phase 5 of the pit. And so what we're going to see, whenever you start off a new phase, you're always going to deal with sort of peripheral lower grades. But over the course of the next 4 or 5 years, as they're mining their way down phase 5, they're getting closer to the core of the ore body, which is going to be higher grades. And so we'll see not only increasing production through the course of this year, but we're going to see higher grades on a year-over-year basis as we work our way back down this phase 5 of the pit. So definitely that's it. But we've got a lot of exciting other projects going on. The Blackwater project, Artemis, very near to production. They're doing their best to try and get some production out, before the end of this year. So fingers crossed. They're doing a great job. We've got, B2 Gold up at the Goose Project in the Northwest Territories. They're expecting to tag on production at the start of next year. And then Platreef, of course, our first venture into Africa. They're expecting to start production, albeit at a smaller scale, but start production likely the start of next year. We're really happy. We just announced this deal, and already a couple of weeks ago, they're talking about ramping it up substantially over even what we were investing into and getting up over 10 million tons per annum. It's an incredible ore body, that Platreef ore body. And so, really looking forward to that. We'll start seeing some production from that, as I said, next year. So really, there's a lot of development projects that are coming forward, and we expect that to continue to just add to the equation.
Going back to gold prices, you're aware that gold hit a couple of all-time highs into 2024.
Yes.
But I'll notice that, we're still struggling a little bit with gold equities right now. Looking at the GDX with the index of the gold miners down to date. Wheaton is also down to date this year as well, too. What's going on with the disconnect?
I think what's driving the gold price, and I think it's clear, there's a number of factors that really sort of point this out. Gold prices are up because central banks are buying. Yeah. Central banks are buying because they're nervous about the U.S. dollar reserves that they've got in their central banks, and so so the challenge is how are we gonna expand beyond that? We're not seeing the ETFs grow. We're not seeing the equities being supported. We're also not seeing silver move. Right? Yeah. Silver's moved a bit, but it hasn't moved anywhere near what it normally does. So that tells me that this is really driven by central bank buying these record prices. But there's a good sound reason as to why those central banks are buying. And I think the more people that realizes that reasoning in terms of, lack of confidence about the way the world looks right now, and especially related to the US dollar, perhaps gold is more. So, we are starting to see a little bit of a pickup. The GDX has sort of clawed back some of the gap, I'd say, between what gold's done. So we are starting to see a bit more interest. We're getting inbounds from generalists wanting to learn more about the gold space. And so we are seeing that more and more. And I'm confident that over the next couple of years, that central bank appetite is going to spread. So,
gold is broken out, but Bitcoin is broken out in a big way right now. Is that taking some of the attention away from precious metals?
It's such a different beast. The volatility and the lack of any substance behind it. The only thing a Bitcoin has in it is a hope that someone will pay more for it than what you paid for it. And I don't think any investment strategy should be based on hope. And so that's the challenge I see with it. Is it's something that can be replicated. There's going to be it's the cryptocurrency of today. What's the cryptocurrency of tomorrow? It can be copied. There's going to be other structures. There's only one gold. And so I think that, any rapid move up like we've seen, has a lot of risk attached to it. It reminds me of some of the early days of silver, actually, a much higher beta, much higher volatility. That's not where you want to be going for a safe, stable store of value or a measure of value, right? That's what gold delivers.
Congratulations to gold miners. Gold prices are looking very healthy right now. But let's talk a little bit about base metals. And I think that would be something that, being a royalty and streaming company, you would kind of like to see an incentive price for some of these copper and some of these zinc projects to actually move off the shelf and get developed right now as well too. So, if we get better prices or we get a better incentive price, I assume that's better for wheat.
Most definitely. It's not very well recognized that just about the majority of our production comes from copper mines. It's a byproduct from copper mines. And 3/4 of our production comes from base metal operations, right? And so that's an area. I always joke about the fact that we spend a lot of time at gold conferences. We should be spending more time at the copper conferences and the base metal conferences. There's no doubt that as we see that appetite growing, we see opportunities to come in and help fund the development of those minerals. The criteria, the quality is an interesting one. And it's one of the reasons that we were comfortable investing into Voisey's Bay in cobalt, is because that's the cleanest, greenest cobalt produced in the world. And especially in the cobalt market, as you understand, a lot of it does come out of the Congo. I'm sure most of that is responsibly sourced, but there's definitely some color behind that. And here we have a mine in Canada that produces, at very high environmental standards and very high social benefits being contributed to all the local stakeholders. As I said, the cleanest, greenest cobalt being produced in the world. And so we're always looking for opportunities like that. And I think as the world matures, provenance has become more and more important. Mm-hmm. And so it's incredibly important for us to make sure that we consider that as we're choosing our investments.
Randy, I know you must have your pulse on all of these projects as we get close by, because these are going to be opportunities for Wheaton right now. But I'm interested in the incentive price, and if we're at a place where we can actually see some of these copper projects go into place right now, and what the comfort level is. I mean, we see that there's a real thesis for copper right now, and everybody's talking about energy transition. The EVs are even talking about AI, because you're going to need to run all these electric cables in it as well too. But we just saw copper kind of break through 4, but it's been kind of in a tough place right now. Do you get any feeling that people are dusting off projects? They're getting a little bullish? Or?
Yeah, I don't think a lot of them have gathered dust. I think they're kind of advancing them slowly. It's the concern is making the financial commitment to go forward. These base metal projects, it's one of the reasons why Wheaton has such a long reserve and resource base, is that we invest into a lot of base metal projects. They're very capital intensive. So the first challenge is you need a good reserve and resource base to justify the investment. Secondly, you have to raise that capital. And whereas most gold projects are $1 billion plus or minus, most base metal projects are $4, $5, $6, $10 billion to build up the large scale base metal projects. So that capital intensity, of course, creates opportunities for us to help fund that. But it also means that they have to be a lot more confident about long-term prices. And so having copper just break through $4, I think they're going to want to see some stability in terms of that pricing. But the other aspect of it is, in a lot of cases, debt forms part of the financing package that builds these things, and interest rates haven't come down yet. And in fact, depending on who you listen to, how confident are we that we're going to see lower interest rates? And so those higher interest rates do make financing projects even that much more expensive. And so all of that is going to combine to, these projects, they're not, I don't think they're gathering dust, but it's a matter of making that construction commitment, and you better have a strong balance sheet if you're going to step into that, because these are multi-billion-dollar, multi-year builds that you have to have confidence in commodity price and your own financial capacity to carry it through, especially in an inflationary environment. And so Wheaton will be part of the solution. We can't be all the solution. There needs to be a healthy equity market, and there needs to be a healthy debt market available to help get these things built.
Let's talk about M&A and talk at some of the moves that the seniors made. So Newmont completed its acquisition of Newcrest. They talked about the divestment that they're doing. They're doing a real focus in BC. Wheaton is headquartered in BC, but projects all over the world. And I guess the other interesting development is that Agnico firing on cylinders, kind of keeping up on the market cap of Barrick right now. Your thoughts on what's happening with the seniors and how they're positioning themselves?
Anytime there's a transaction, there's always and a need for capital to support that transaction. There's an opportunity for Wheaton to come in. The one challenge that we have is that we're very selective about what we invest into. 93% of our production comes from assets that are in the first and second quartile of their respective cost curve. So that's to say, if we're getting gold from a copper mine, we want to make sure those copper mines are in the bottom half of the worldwide copper cost curve. The challenge with a lot of these assets that may come up through dispositions and stuff like that is they're typically not very low cost assets. Because if there are high margin assets, then it's, sometimes it's a matter of scale. So there are a few in there that we're interested in, and we're definitely having discussions about some of the opportunities that may come from this. But no promises in terms of that. There are assets in there that really don't fit the Wheaton mold in terms of high margin, long life assets. So that's one of the things that we've built our entire portfolio around, is having that framework. And so we'll see. We're definitely talking to some people and some potential candidates in terms of making some acquisitions. And as I said, back to Agnico and Barrick and so on, anytime there's any type of opportunity in the space, there's always an opportunity for our capital, especially in today's market. What most people don't realize is streaming is valued based on the value of the metal, the inherent value of the metal in the ground, not your equity. That's why it's so attractive to anyone. It's much more attractive depending on how companies are trading from an equity perspective than issuing shares.
The other big headline that was in the mining space was First Quantum with its Cobre Panama. That was a top 10 copper miner that was discontinued because there was just not political support for it as well. You've had to deal with your own issues in the past in terms of mines that, how would you say, have gone sideways or just haven't been able to get support. So But I just was wondering, is there any lessons learned on that? Was that just a one-off, or is there any type of trends that you see?
I mean, first off, it's a shame that happens, especially after the amount of investment that First Quantum and Franco put into getting that asset up and running. Would have thought that they would have had enough political stability to move that forward. It's not good for the industry as a whole. It's not good. And to have this, no copper in my backyard approach, that's not healthy for society. I know Panama consumes copper. They all use cell phones and drive vehicles down there. So to argue that they can't produce copper, that's not a healthy movement anywhere in the world. Panama was a risky jurisdiction. We had an opportunity to do the Cobre Panama stream originally, and we weren't comfortable with the framework. And so that's why we don't have a stream on Cobre Panama. We really focus on multiple aspects in terms of providing comfort and confidence on our assets. I mean, we have multi-level security and asset registration down at the operating level and at the parent level. That's one of the key things that we wanted out of, in any opportunities, in countries like Panama. But we also put real heavy focus on our stakeholder support, our ESG programs, our community support. It's something that we started back when we did the original investment into Salobo down in Valais, and we're really proud of the program that we have in terms of co-funding community programs to strengthen the social license around this. And I know that helps a lot of our partners maintain stronger social license and avoid issues like what we saw in Panama. So it's a multi-pronged approach in terms of trying to avoid being exposed to that. And I would say to date, it's still worked successfully for us. So, we're pretty happy with that. There's always going to be lessons learned as we watch how other companies treat risk, but we are very, very averse to risks. And we try and manage it in terms of how we structure and also how we value the asset.
You gave up the chair of World Gold Council last year and handed that off to Neil Froneman at Sibanye-Stillwater. What was you had a really big marketing push, and then that was certainly around the star power of Idris Elba, although there's a lot of other pieces that were happening as well. But I just what was the top message that you wanted to convey?
Well, and so I didn't give up. I termed out. In fact, it's a 2-year term, and I wound up had the honor and the privilege of staying on for an extra year. So I did get 3 years, or they had to suffer with me for 3 years. And I'm still very active in it. It's an incredible organization. You got lots of capacity and to do well. And the one, there's no doubt on the marketing side in terms of presenting gold for what it really delivers to society was something that we really amped up and pushed forward. But the most exciting aspect of the World Gold Council is the Gold 247 initiative, 24 hours a day, 7 days a week. And it's digitalizing how we trade gold, how we own gold. And so we're in the process of working on the institutional side. We're not going to do the retail space. We're hoping that if we can come up with a system that works on the institutional side, it'll spill out into the retail space. And so what we're doing is working with a large group of the biggest bullion banks in the world, the HSBCs, the ICBCs, the UBS, the JP Morgans, the Bank of England's in there. We've got this, we jokingly call it the G20. And we're focused on coming up with a digital token system through the incredible use of blockchain and, fantastic device where gold doesn't have to move. And it can be, and you can have a token that just gets transferred and moved around, is replicated and backed by physical gold, physical address through blockchain that can link it back. It can be fractional. It can be moved around and traded almost like a currency. And to be honest, the way we own gold really hasn't changed a lot since the ETFs were invented back over 20 years ago. And I think it's time to bring gold ownership into the 20th century or 21st century. I would argue the 20th century. Actually, it's been that long. And so I'm really excited about that progress. We're expecting over the next couple of years to be implementing that, bringing it in. As I said, the whole concept is to get it at the institutional stage first and get it so that you can get these banks comfortable with interbank transactions that are gold backed and gold tokens. And once we come up with a system that works institutionally, there's absolutely no reason why they can't just spill out into the retail space. And it'll just add another high confidence, but very liquid way of owning gold. And so that's probably, in my eyes, the most exciting thing that's going on at the World Gold Council right now.
Lastly, Randy, I just wanted to talk about career highlights, accomplishments at Wheaton. Congratulations. This year is going to be 20 years since you started Wheaton. Looking back, what are you most proud of? What were some of the key accomplishments? I mean, just before you start, I mean, you've built up Wheaton to be, I think, is one of the largest companies in British Columbia, if I'm correct, depending on. Yes.
Yeah. Mm-hmm. No, it's. I mean, it sort of highlights what I've always argued. Vancouver is and British Columbia is a excellent source of creativity. It's an environment that sort of spins that out, and so we see lots of evidence of that. I do think Wheaton is something that Vancouver should be proud of, and that BC should be proud of, and what we've actually delivered is an incredible business model that supplies capital to the industry. And we are long-term investors, right? We invest into these mines for the life of the mine. And so, there's not a lot of long-term investors in the equity space in mining right now. We are those long-term investors. But when I sit back and think about what I think is most, my biggest accomplishment, it is the fact that we've taken the old royalty model and I think we've delivered so much more value. Because even now royalties, the ESG, that side, the fact that we're getting benefits from these operations, we should be contributing back to all the stakeholders. And so that co-funding program, that we kicked off, over 10 years ago, 12 years ago, I guess it was, with, Vale, and has now grown into all of our operations. What I'm most proud of is even the old stodgy, royalty companies. Guess what? Their new deals now have contributions towards that. And, I smile at that because, way back in the last century when I built and operated a couple of mines, I always hated the royalty guys. They just wanted to check every quarter, and they sent in an auditor every year. And it was never a positive relationship. And I think, I really do think that we've kind of changed that relationship in terms of developing pure partnerships where you're actually sitting there and on a continual basis trying to find a way to help your partner be better. Right. And so I do think that it's changed the entire royalty / streaming space into a much more, proactive, supportive environment that I think will continue to deliver good support for the industry.
Randy, we look forward to checking in with you for the next 20 years.
Yeah, I might be retired by then, but always a pleasure, Michael.
Okay.